Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFTperp. In this episode, I talked to George, one of the core team members from NFTfi. NFTfi is a P2P NFT lending and borrowing protocol that connects borrowers and lenders execute NFT as collateral loans in a trustless way. We dove deep into their origin story, what they're building, and their roadmap ahead. And just a little disclaimer before you start, we have some audio issues throughout the podcast. You might hear some static noises. But without further ado, let's welcome George from NFTfi. George, thanks for coming on to the podcast.
Yeah, thanks for having me.
Maybe we can get a little intro of yourself first. Tell us a little about your background, what you do at NFTfi, and we can kind of lead on to the question moving forward.
Yeah, sure. Let's do it. So I'm George. I'm from Berlin. I've joined NFTfi as part of the core team mid-end last year. So basically, when the crazy growth started, I'm responsible for the community and growth and some other, special projects. And yeah, it's been a crazy ride in the last months. My background is in business information science. Studied both in Germany and South Korea, and kind of caught the early, technology and mobile internet wave some time ago, and then went into crypto in 2014. Pretty much on the research and made some early Bitcoin exposure, and then full time, to the space since 2017. It's definitely not my first, I'm not the first crypto or project, but I'm always learning new things, especially with NFTs. It's basically 1 year in NFTs is probably 10 in other industries, I would say.
Right. And since you've been around since 2014, it's practically 80 years in crypto.
Yeah, exactly. I'm old. I feel it. I have gray hair.
Thank you for the background. I feel like the early 2014 days, or at least early on, what crypto was all about, what Bitcoin was all about in the early days. I think in the inception of Bitcoin and the idea of decentralization kind of set off this initial wave of enthusiasts, people that are passionate about removing a third party or the middleman sort of thing, and that set off a massive wave of innovations and built on top of it. And now, NFTfi is obviously a very application level of a product, and same as an NFTperp over here. Love to kind of dive into maybe NFTfi sort of things. When you joined the protocol, how long have they been around? What was the genesis story behind NFTfi?
Mm-hmm. Sure, I'm happy to share some of the origins. So it was a bit of a lonely place in the beginning. We started in end of 2019, actually, and basically had the first version of the product out May 2020. So good 2 years ago. And we're pretty much alone, I think, for the first year in that field. Did 300,000 in volume in 2020. And then kind of 40 million in 21, and so far already more than 190 million in USD loan volume. And basically the early story was that Matt's one of the co-founders, and Steven, current CEO and co-founder, is they were basically trying to use their CryptoKitties to long Ether. So that's the origin, and started off in peer-to-peer fashion in Telegram chats, borrowing money and relying on the trust of your immediate contacts. And then very very quickly it became apparent that there's a solution needed to basically use NFTs to do that in a collateralized way. And this is when basically Steven used the first lockdown in South Africa, Cape Town, to basically build that product, and then basically lured in more of his friends and companions from the last years, building crypto exchange and building other products together. It's basically it was in the initial days friends doing let's say, crypto transactions and needing a better vehicle to do this. And yeah, why not build a cool D app for that?
Got it. Yeah, that makes sense. Super interesting in terms of the origin story. It sounds like it's a very basic need between friends, and that's one of the reasons why I think protocols that come out of that mechanism, or that I guess that type of origin story makes it you have like a product market fit on day one because of the initial demand for within your community, right? So I went into your Discord and kind of poked around a little bit and realized that there's actually quite a bit of OTC deals happening, just from people initializing, hey, I'm asking for a loan, looking for stuff like that. So I thought that's really interesting. It looks like you guys just kind of found a way to bring this process on chain. So it's a escrow.
Yeah.
It went from okay, I trust you, you're my friend, so I know you'll pay back a loan. If not, give me your NFT to a way where you can essentially make a deal with anybody across the world. Yeah, you could be a person in India you never met before, but because of this platform, you can establish trust, and because it's a trustless system, right?
Exactly.
So that's really interesting.
So that's really, I think, important to understand. So we are a peer-to-peer, NFT collateralized lending marketplace. And I think there's several things that are important to understand. So first, when people use their NFT to access liquidity, they basically have to trust the smart contract, which is a double audited smart contract, to keep a hold as a security for the lender who provided a crypto loan for a specific duration. And for the borrower, I think the biggest value add is first they get access to liquidity, obviously, but then again, they also do not get auto liquidated. And I think in these markets, we also see a lot of volatility and downturns. The market's not just going up. That's an important distinguishing factor between, let's say, a peer-to-peer and a peer-to-pool model. And with us, it's basically the choice of the borrower to pay back at the very end of the loan duration, financial terms as a bullet loan, or to not pay back. And this is a choice by the borrower and not a choice of a price oracle or of the basically the pool.
Mm-hmm, mm-hmm.
And I think the second thing that is important is that since it is let's say it is a peer-to-peer fashion with how we run this, we do not underwrite the loan, so it's a lender who does, obviously, and we do not also take risk. So the let's say pricing of the NFT itself and also of the thus of the loan, it's basically done completely by the lender because, to be fair, they're also better at it. We as a centralized entity, like in that process, would never be able to come up with like a fair, in our sense, a fair valuation, because there are very deliberate strategies by various lenders. They have different beliefs about the market. They have different appetites for risk. They can value NFTs much better because they know the project really well and know how they will stand up in any kind of the market. So I think this is really important to understand, like that this is a very different model, for example, than a peer-to-pool, and in the peer-to-peer fashion, seems, at least that's how it appears in the market, it's better suited at the market at the moment.
Got it. Very interesting. A couple of questions as you're kind of explaining this process kind of come up in my head. So I guess the number one question I have is, what are the common ways for your community members between lenders and borrowers? How do they agree upon a valuation for a given NFT? Mm-hmm. Is it through a negotiation sort of type? Do you use specific pricing protocols or appraisal models for people to take reference? How does that work?
Yeah, I think that's a very good question. So ultimately, the lender in that sense is at the core of making that decision, right? So he or she needs to basically come up with a rationale behind his or her strategy, how to lend out money, and there are various out there. So from a lending perspective, you would see listed collateral that a borrower put up on NFTfi and be able to place basically a bid. And a loan becomes only effective if the borrower takes that bid. So there are various bids per asset, and only if the borrower is happy with that bid, then an effective loan is put into the into the escrow smart contract.
Very interesting.
Yeah.
So to back it up real quick, what you're saying is all the offers are essentially is me as a borrower who needs access to liquidity. I will put my NFT on, not necessarily, there's no custody on the platform yet, right? Until a loan is actually activated.
Exactly.
So it's just like a basic listing. I sign the contract. I sign some sort of lifeless check that I own this NFT, and I can start accepting offers on this specific NFTs. And lenders become sort of like competition within one another.
Exactly.
To say, I'll give you the better loan, terms, durations, and premium.
So exactly. So it stays in your wallet until you, as a borrower, would accept the bid of the lender, and until then, it's getting offers that are valid for 7 days. And typically for like blue chip collections, as a borrower, you would see 10, 15, 20 offers coming in within the first 10 minutes. So it's really competitive. So as a borrower, you would definitely get a market basically assessment of your ask. And I think because you do that, you can think, at least at how I conceptualize it, it's like a liquidity curve, right? So it gives you may have put in some ask, but some of the lenders will say, well, maybe he wants even a higher LTV, so a loan to value ratio. But for higher APR, right? So maybe that's something that's his or her appetite for, and then you could actually choose from that liquidity curve as a borrower to basically get that money fast, or like maybe wait a bit, one day more or several hours more until you're satisfied. And maybe one point also to mention is we have also put out our an SDK and an API. So we do. It's in a private beta program. So because we want to understand, the motivation and also the personas of the let's say more automated lenders a bit more, and we're seeing quite strong traction on this as well. So there's an increasingly amount of automated lending done, and it's that there's basically for lots of collections quite an immediate access to liquidity for borrowers because of that.
Very interesting. Can you elaborate on how an SDK would work? Like, what sort of user profiles will be using these sort of SDKs, and what kind of benefits does it bring to that specific protocol or third party? It could be an institutional grade lender. Like things that come to mind will be people like the Dallas, like Goldman Sachs, for example, right?
Yes, exactly. This is so there's actually a quite big array of different lender types. So they're very big individual lenders. So this is not just like hedge fund style kind of or like lending or like liquidity provider lending. It's really also individuals who have very obviously sometimes big pockets and big assets to lend out, and they're using NFTfi to basically generate yield for their crypto assets. So we do so currently you can earn, you can lend out wETH and DAI loans, but we'll surely also unlock further basically options and for lenders. But I think to come back to your question, it's a big array. So it's both from like, let's say, lending DAOs. It's basically collector DAOs. Also like pursuing, for example, an interesting strategy on some, for example, generative art projects where they would basically do something what we call a loan to own strategy. So they are basically like defaults, which is very interesting. It's very counterintuitive what you think that a lender would like. But because they have fundamental beliefs and maybe also some insights how this project will evolve, if they get a default on a loan, they actually, in their perception, think they got it on a discount. So they don't lost just 30, 40% on an asset, but they just got it on a discount. That's maybe the way you can think of it.
Right. So given the correct loan to value ratio, if it's on the lower end and their borrowers have to default on these loans, it's almost a benefit for them for buying these NFTs at a discount.
So I mean, there's so we see us as a settlement layer, like an NFT finance settlement layer, effectively. So we want other, basically also new projects to come in and build on top of the NFT finance primitive that we have created, which is called the promissory note. So there are already players in the market, for example, MetaStreet, which basically buy up an NFT promissory note, which is representing an active loan, and then tranching them into different tranches of risk, basically. So it's kind of them being the Fannie Mae of the NFT finance space. And I think there's various other opportunities to pursue very profitable business models on top of NFTfi.
All right, very interesting. For those who don't understand, can you explain what a note means in a loan?
So it's basically another NFT that we mint as a representation of an active loan. It has the same functions and is basically an option to allow for greater composability. So we can it's not bound to an account, or it's not bound to like a specific set of rules, but it can travel and thus becomes able to unfold this NFT finance Lego, if you want.
Yeah, very interesting. Thank you for explaining that. Can you walk us through how, as a lender, maybe through a lender and a borrower, like walk us through how a lender or a borrower, maybe give us 2 examples on how they can interact with NFTfi.
Right. So we are basically, this is currently still a centralized part basically of our process, but we do allow list an NFT collection. We have like over 300 live, which means there isn't really a reason for any quality project not to be low listed on NFTfi. So what we do in that process is we basically check for floor price, which needs to be above 1 ETH at the time of the allow listing, and the trading volume needs to be above 500 ETH. Next to that, what we do is we look at the community.
Trading volume as in 24 hours? Or
okay, that's a good point. No, it's actually historic trading volume on OpenSea.
Got it.
It's a simple measure, and sure, we can also improve that, but it's a very simple, let's say, mechanism to detect lender appetite and like a healthy community, basically. Then we look at the team and the community, if there's any red flags, if there's any basically mentions of a rug pull or like a team not checking out. And we do have like lots of people in the community to help out with this. Primarily also our NFT ambassadors, which are part of a bigger program that we're running, and then we do also like a technical check on the smart contract of the specific project, so we don't basically allow list a fake CryptoPunk contract and would put lenders at risk. So that's something we take very seriously and spend resources on, because this is still so important to do the quality vetting there. So once the collection is basically low listed, then a borrower that has an asset of that collection or soon actually would be able to also take several assets in a bundled offer to NFTfi, basically get lenders to bid on that asset for a loan. And once the borrower basically accepts the bid from the lender, then the NFT moves to the escrow smart contract of NFTfi until the loan is paid back in full. Then it would automatically move back to the wallet of the borrower, or at the very end, or it could also not be paid back. Then the lender has the opportunity, it's not an automatic process, to foreclose on the loan and take the NFT and put it into his or her wallet. And that's pretty much it. Like of course there's lots of maybe conversation before and after that. So that happens either on in private peer-to-peer fashion. That happens on our Discord, it happens on Telegram, it happens on Twitter. We do support that with having infrastructure, but we never match borrowers and lenders directly. We have built permissionless infrastructure to allow for that.
Got it. Yeah, thank you for walking us through. That's very interesting. Quick question: since it's a P2P model, on average, how soon does a loan get agreed on both sides and move in motion? Let's say for a blue chip collection, like maybe Punk or Bored Apes.
That would be very quick, I would say, because you do get, like, as I said, like 15 to 20 offers within the first 10 minutes. I don't have, like, to be honest, I don't have precise data on this, but I would think it's very fast.
Yeah, that sounds pretty quick, actually. I'm very interested in specifically this part because over at NFT Perp, we're building this NFT derivative protocol, and an ideal scenario for our users will be using lending and borrowing protocols to use their NFT as collateral, and they can get access to efficiency of capital and use that capital to either self-hedge or trade on other market pairs, something we're pretty interested in.
Mm-hmm.
Yeah, all right. Thank you for answering all the questions. I guess like a couple more questions that we have. What do you see the long-term vision for NFTfi is?
I think we have built, so the version 1 V1 was basically built in May 2020 and has been live until March April 2022. So we took actually like a deliberate time to build our V2 because it's now a very flexible system of smart contracts that allow for like basically very broad options in NFT finance space. And this is important. So basically now we are able to support any kind of loan types or other options in the NFT finance space very quickly, and with very small changes to the smart contract, or not at all. If basically it's just things that are need to be unlocked on in the UI. So, and looking a bit more into the future, it's, as I said, like the vision is a permissionless, also user-owned utility, and basically allowing for the same flexibility that you have in liquid asset classes. The same also matching opportunities, and because we know like it's really best that if you focus on some very specific things, we love to stay at that level. So we love people who build with us and to explore that space. That's why we're there's a hackathon coming up. There's existing players we support through our SDK and API, and we really love composability. So we like to stay on our basically playing field and basically enable as much as possible others to explore that fascinating industry with us.
I love that, and we look forward to meeting you guys in the hackathon as well.
Yes.
Yeah, thank you. I guess like leaving a couple of last questions that I have would be number one, how does NFTfi make money if you guys do? And number two, are you guys looking to launch a token?
So we do make money. So if you have followed, maybe there's the June dashboard out built by Richard Chen. It's pretty extensive. You can also basically see what money we are making. So we take 5% of the interest rate earned. So we don't make money on any defaults, and we don't take money from, let's say, from originating loans. So that's So because we really want the space to evolve and like basically, I think have a very fair take rate and try to be very frugal also how we spend money, and basically keep the team small and agile, and then move fast because we're like very dedicated individuals that are in the team building NFTfi. And
love that.
And the second question was, I guess, around the token. So there will be a token at some point. We haven't launched one yet, as you probably know, and so you can think of us as also having basically unincentivized loan volume. So it's really market demand that you see at play, and not maybe some incentivized volume. Mm-hmm. So that's for us is very important because we really want to know if we keep product market fit, and if you have a token that somehow can, let's say, clouden your view. No.
Right. Yeah.
But
I think as a protocol,
as another thing, like having that said that, of course, there's lots of good things you can do with the token, and we have the tokenomics model ready that would support that. and we were excited to launch it when we feel it's the right time.
Yeah, I like that. I think for protocols that focus on organic demand and metrics and around a good business model is one of the most important thing, and token is almost secondary in some cases.
Yeah, exactly.
Yeah. Well, thank you so much for answering most of our questions. I would love to maybe take a minute or so to open up the floor to any listeners that's live with us. If you have any questions, feel free to raise your hand. We can get you on. If not, no worries. Tell us a little bit more about how to follow you guys. What are the upcoming updates?
So I think the best way is obviously Twitter and then our Discord. You will find the invite link, which is quite straightforward in our Twitter bio. We regularly also publish like Medium articles. I think a cool series, if you also want to have a better view on the market, is the so-called The Advent of NFT Finance series, which is live on our Medium. It dives into specific verticals in TradFi, and then has various that's like 6 articles. Why we think that NFT financialization is so important. The little takeaway is, because we feel that, because it enables the whole market to transform from don't get me wrong, from a funny asset class to a real asset class. So that's why we in the NFT finance space, we make that happen. We allow for that utility to be unfold, to access liquidity from an illiquid asset class. And I think, if you were read those articles, we definitely also I would like to get into a conversation with you. If you're coming from that space, if you have a different view, we are very open also for having joined AMAs, and we'll love to have you also on one of our AMAs or in the Discord or Twitter spaces.
Absolutely, we're definitely going to do that. I think the whole premise around LookatMyJPEG is around trying to build more presence around the NFT, DeFi, NFT finance space, and as you guys have seen, based on the last it's been around since 2019, 2020, 2021, and now 2022. The volume itself kind of speaks for itself, right? Like in terms of what's being traded on your platform. I think that represents a very organic demand. Like you mentioned earlier, there's no incentivized volume. So really bullish on the NFT finance space. And as more regulatory environment and infrastructure develops, there's a lot more we can do with NFT finance, things that are related towards perhaps like tied to physical goods, properties, contracts. I think these are the things that we're very, very bullish on. For those, Alon, do you have a question for George?
Yeah, the point was just kind of touched on regarding what's next for NFTs, what we think, or what do you think, George, is next for NFTs, and what do you see is the future, or up next in terms of real world assets, perhaps, and maybe other things?
Yeah, that's a good one, and it's definitely a personal opinion I'm sharing here. But I've been to various conferences. I've tried to be very selective, but NFT Berlin, obviously, since I'm located in Berlin, and then we've also went to NFT New York, NFT NYC, and some smaller, let's say, get-togethers. And my opinion is it will stay for longer in the ANC space, like I mentioned, or a vertical, but it will also eventually evolve into NFT music, and met several teams are building it into the NFT music space. And then I'd say probably NFT, like say IP or around that, like rights kind of space is probably something also. Like I'm close with a project that is helping the IP monetization for, let's say, early biotech startups, so that there's a really, really big need to be solved there. But it's, again, earlier stages, and definitely the builders are now, and let's see if they catch the next NFT wave.
Yeah, that makes sense. Thank you for the question, Alon. All right, George, we really appreciate you taking the time to hop on this quick Twitter space with us.
Sure.
And we learned a lot about NFTfi just in this short conversation, and we look forward to connecting in the future.
Thank you for having me. Exciting to work with you together.
All right. We'll catch up soon. Thanks, George.
Cheers, guys.
Bye.
Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.